Hello, everyone. Wow, this is great. Amazing production quality and music. Really loving the vibes in here. So I'm Brianna, strategy lead at Eigenlayer. Really excited for this panel. Let's go through and introduce ourselves.
Yeah, perfect. I'll kick it off. My name's Chunda. I'm one of the founders of Ion Protocol. Quick recap of what Ion Protocol is. Essentially, we're kind of two things, primitive and a product. Primitive is we do credit risk analysis on validators utilizing cryptographic primitives such as like ZK state proofs and ZKML. And then we build financial primitives on top, such as our beachhead product, which will be a lending market that's price agnostic, focusing on staked and restaked assets.
Thank you. I'm with Genesis, so we are building the first native token on Eigenlayer, also building an insurance on-chain against slashing, and also working on a flash and staking option so you can get your yields faster as all the degens want.
Awesome. So I'm here representing Inception. Basically, we are a liquid restaking protocol built on top of Eigenlayer, where you can restake your LSTs and have a higher yield.
Yeah, I'm Sherv, or Shervin. I'm an advisor / contributor at Restakify. Restakify is aiming to build like liquid restaking on top of Eigenlayer.
Awesome. All right, let's jump into the questions. So as we look to the future, how do you envision the dynamic between your project and other restaking initiatives and also Eigenlayer?
Yeah, I'd love to kick that off. I think the way I kind of see our positioning, and it's kind of an interesting role that I think we want to play, is specifically we want to focus on answering the question, how should we think about risk and how should we think about underwriting when it specifically comes to staking specific credit risk, right? So we want to kind of step away from the traditional mechanism of like think about dollar denominated like credit risk in like lending and borrowing. Instead, focus on answering the question like, okay, if we understand that effectively the main risk you want to underwrite is kind of concentrated on slashing risk and then also like downside penalties if certain AVSs want to implement that. How can we actually predict, analyze, and make sure we can keep transparent the amount of risk that is within the system so that way we can make sure our users are kind of safe in being able to truly understand what kind of risk they're undertaking by entering into restaking positions and also by, of course, using our protocol. And in that sense, in building the underlying primitive behind Ion, I ideally would like to build a permissionless system that can assess at scale the credit risk and kind of exogenous slashing risk that exists in all the different AVSs. And as a byproduct, ideally can act as kind of like a credit rating system for AVSs at large within the DeFi ecosystem.
Yeah, so the way that we see, especially the risk part, is by partnering up with the best AVSs, the best validators in the space. Right now we are working on an index where we will put together all the best validators in the space so we can we offer a customizable solution to our clients. So we need to make sure that really all the validators that we are staking with are the ones that with the best risk profile and of course the best yields, but especially that they are not, they don't have a slashing history or that they are obviously doing good in the space. So really that's something that we are really focusing on that. And also from the Eigenlayer part, like we continue to I think that working together with Eigenlayer to produce and to continue to build technology is really something that will change the space. So Eigenlayer is really at its infancy, and we are, of course, building with Eigen because we are on Eigen. So for us, something that is really, really important is to continue to work together with Eigenlayer to make sure that we are developing the technology together and that we address the risks also together, So that's really how we envision things going forward.
Awesome. I have a quick follow-up question before we move on there. So how are you going to do AVS selection? And then for everyone else who might not be familiar with an AVS, that's an actively validated service. So anyone who's getting their crypto economic security from restaked ETH capital.
So right now we are choosing the validators, and then each validator chooses their own AVS. So we are already trusting the validator to choose the AVS. So right now, that's why we are working on the index for the validators, and then each validator should already assess the risk from the AVS beforehand.
Okay, got it.
Yeah, I think you mentioned the right points, right? I think the goal here is cooperation. Definitely cooperation with Eigenlayer and everybody in the space. That's what I believe in, and I think that, yeah, like the first step will be to really create the infrastructure for everybody to be able to build on top of Eigenlayer. And you know, when you guys launch, you'll better have an understanding of how everything works and go for it. I think then the next stage will be definitely trying to understand how can we onboard all the validators and all the EVSs and have it, you know, really fully onboarded and ready to be, you know, part of this ecosystem because they are a core and part of this. And then, yeah, I think the last stage will definitely be like important projects like Genesis or Inception or Ionic, where we're really trying to, you know, just build this DeFi ecosystem on top of all this infrastructure that's in place. So, yeah.
I think the main idea is to be like value accretive to the whole ecosystem, right? By basically allowing for higher capital efficiency, whilst preserving the ability to, you know, take advantage of individual risk and return preferences through the modularity that Eigenlayer provides, and having our liquid staking derivative that you can then use in other DeFi protocols.
All right, awesome. So what strategies are you all implementing to secure liquidity for your projects once you launch?
I mean, so in our sense, securing liquidity is more a factor of like thinking about, because, you know, by practice we are a lending market, so counterparty liquidity and things like price stability is something that we actually want to step away from, because we're thinking about kind of more hardware specific and more of kind of validator specific methodology of underwriting. But I think the thing that is a good question is like, okay, how do you want to bring people into the system, and kind of what model are you thinking about on incentivizing kind of restakers to enter into the system, and by proxy also other kind of liquid restaking providers as well. And I think for us, like the main perspective is we want to be able to create the system where we can better financially incentivize those who build better and more secure infrastructure, right? And that's kind of the core principle behind pretty much all of our like development when it comes to risk underwriting and everything like that, is by building better infrastructure, by implementing things like anti-slashers, by making sure your slashing risks are very transparent and like attributable on chain and so on and so forth, we can build more capital efficient markets for those types of assets. And I think there's this really nice push and pull that exists, because in effect, that additional capital efficiency due to like the decreased risk downside will increase the amount of usage of those assets. And so, for example, like LRTs, it might incentivize certain LRTs to select certain AVSs which are safer, and ideally could create this kind of free market on the basis of kind of creating this push and pull on risk-adjusted rewards and trying to optimize for capital efficiency when we take into account that kind of like endogenous, like hardware-oriented risk. And I think like that's the thing that we really are excited to focus on.
Yeah, so for us, right now we are really focused on bringing partnerships and making partnership with the liquid funds, and to bring, of course, more TVL. We are also focusing on gamification, so make sure that we have a platform very lean where people can play small games to also be incentivized to stake with us and to be in our platform. And also we are launching our referral program. So by referring a partner, you can get more rewards, etc., etc. But really, I would say that the main focus is really bringing liquid funds to Genesis and show that what we are doing is really the future of restaking, the future of staking. So that is really what we are focusing on right now.
Yeah, definitely. Like DeFi integrations, I think are very important. That's what gives use case for the token. It's very important to have deep liquidity, because in the end of the day, having a liquid restaking token allows you to exit your position faster, just like liquid staking. I think we're trying to go for like a sustainable approach. Like, and this one example is the kind of pools we can build, for instance, on Balancer, where what they do is they do custom pools where you can extract a percentage of the yield and use as bribes on Hidden Hand automatically. And this is quite interesting, and I haven't seen much protocols using this, but what it means is that you have mechanism of incentivizing your liquidity forever, right? As long as Ethereum exists, you're going to have staking rewards. You're going to have Eigenlayer rewards, and therefore you're going to be able to incentivize your liquidity forever. And this is very interesting as well, because you can start to have this positive feedback loop where the more TVL you have on that LP, the bigger rewards you can extract, the bigger bribes you gave, the more incentives you have, and therefore the more TVL you're going to attract. So you can really, inexpensive in a non-degen way and really conservative, find mechanisms of incentivizing your liquidity, and that's definitely what we are focusing on. So we don't rely on incentives or our token to maintain our deep liquidity for our token. So yeah.
Yeah, I think the focus should really be on something like sustainable growth, because you have all these yield farming crusaders that show up on day one, when you pay out rewards, and once the rewards are done, dump everything and move on to the next thing. So I think there's a fine balance between rewards and inflation and building a somewhat sustainable ecosystem. And we are taking all this into account in protocol design, and effectively at the end of the day, as it's another layer built on top of Eigenlayer, which is already built on top of LSDs, it should naturally provide quite attractive risk and return parameters.
All right. So what challenges do you all foresee in the adoption of LRTs or restaking in general?
Yeah, one of the biggest challenges, I think, is actually it's part of the same idea of kind of thinking about understanding risk around the risk, kind of the risk-reward trade-off for users. But I think from the user standpoint, it's split into two things. It's about transparency of kind of the risk-reward trade-off, and then it's two, actually understanding the implications of risk-reward trade-offs. I'll kind of go into like both really quickly. From the transparency side, it's hard to understand where there is kind of one, endogenous kind of risks within, let's say, hardware systems and certain dependencies that hardware systems might have for specific AVSs. And then additionally, there are some AVSs that might have exogenous dependencies on certain actors to fulfill certain actions, dependencies on maybe other AVSs or other services. And that's not really going to be super clear to the average user when you go and click restake on a random AVS, right? And being able to communicate that to users, I think, is going to be a really big barrier in making sure that we have sustainable and safe growth of restaking. And then on the second part, AVS design is basically an open market of free thought and free space to really iterate on pretty much any type of revenue generating service with ideally some kind of on-chain attributable action, right? And as a result, you can create near infinite amounts of various different slashing conditions that could potentially be on-chain attributable. The problem with that is just being able to broach the initial barrier of understanding, okay, how is this a slashable event, why, and being able to replicate that across, hundreds, potentially even thousands of various AVSs, even when you have dozens, is going to be very difficult. And I think most average restakers may not really take that into consideration. And you'll either see centralization of capital within a few AVSs that most of the capital deem as like safe, primarily through like BD or branding reasons, or we're just going to see a flight to kind of like the highest reward upside, both of which aren't really ideal outcomes. So I think those two challenges are the things I really hope that we can dedicate more time and resources to really addressing.
Yeah, I will speak in a more broader term. I'll say that the challenge is really like, first, the space is really, really small for restaking, and not a lot of people know Eigenlayer, right? So I will start with that. And then we have the challenge of even Vitalik being a little bit suspicious, saying that, oh, I don't really know, because this can really disrupt Ethereum, right? I beg to think differently, because I do think that the more you stake, the more secure the space gets, right? And the more Ethereum it's locked. So it's actually a good thing for the space. So what people say is, okay, but it's too degen, too leverage, right? But so let me ask you this. When you go ask for a loan for your house, you don't repay the loan immediately. So it's exactly the same thing as staking. You stake it to get yield, to get your liquid stake, then you get your liquid token and you spend it. You don't repay immediately, you don't and stake immediately. In my own way, at least. I don't do it. I know that the majority of people don't do it. So I see Eigenlayer And I see this space as an actually increase of security. I think that actually improves the space. So I think it's just a matter of time to people to see that, you know. And actually, a friend of mine was with Vitalik this morning and asked him about this. And he says that he's already starting to see like the benefits of restaking. So I think it's a question of time that we just see a big implementation of Eigenlayer and restaking in the space. So yeah, so I think that the main concerns of the public are really the leveraging and the degen part of it. But when we pass that, and we will, I think everyone will start adopting Eigenlayer and we'll start building on Eigenlayer, and we'll see that this is really the future of DeFi, in my own opinion, I guess that is.
Nice. That's super exciting to hear the conversation
100%.
this morning. And then just kind of to add on to that as well, it's like shared security, the cost of corruption goes up as well for the projects when it's all shared. So passing through.
Yep. I think that probably some concerns that also Vitalik has is the fact that there's a possibility if you have many nodes and you're restaking many nodes that if for some reason there's a slashing event, you can have potentially more slashing than the assets that are staked. And of course that's a concern, especially because it means you have risk parameters that are not well defined yet, and probably only like it's like on finance, like only when you have black swan events and crises and financial crises is when you realize that maybe you're taking too much risk and maybe you should create models to adapt that, and maybe that's the issue, especially because it might fall under like securities, right? If you're actively having like the delegation strategists or the managers of that strategies selecting validators in order to extract more yield based on risk, that's an investment strategy. So you can be qualified as security. So that's also like a concern we have and we're trying to solve in the best way possible. But yeah, probably that's the concerns we have at the moment and the risk associated with it. But we are, again, ultra bullish. I think this is definitely the future, and I'm sure both of us will find amazing solutions to tackle this.
If I can add another small note, so like by reading the Eigenlayer paper, you also see that there is a possibility of the slashing goes beyond 100%, and that is still under research, of course. But if you get slashed in two AVSs at the same time, you get slashed to 100%, for example, and that is not possible because you only have 100% of the money on your account, so you cannot literally just take out more money out of nowhere, right? So that is still a problem that I guess Eigenlayer is trying to solve, and that also makes even more emphasis on the slashing protection and on the security issues, and that the fact that we really need to have slashing protection and more security in the space, because with multiple leverage and multiple AVSs, your slashing risk goes up. So that it puts even more emphasis on security, but that's why we are here to solve this problem, so that's it.
Absolutely. A lot of these topics as well are in the R&D stage at our company too. So hopefully at another conference in the future, we'll have more details to kind of talk more to those. Mm-hmm.
Cool. I think it starts basically by educating the users, right? First, you need to understand how does Eigenlayer work, right? What's the modularity? What's the slashing risk? I think that's kind of a paradigm shift for a lot of people in the ecosystem. And then, as a next step, you need to be able to balance those like risk and return preferences, right? And especially for us, building another layer on top, we want to offer this type of modularity where people can consciously choose what kind of risk they want to enter. Yeah.
Awesome. So right now, Eigenlayer is deployed to Ethereum mainnet. I'm curious if you guys have plans to deploy to an L2, different sidechain, or what you're looking at for your deployments.
Yeah, I think ideally we can decrease the cost of using our protocol for all of our users. So I think L2 deployments are common sense. Our general kind of like product philosophy is just make sure the primitive works, make sure it's robust, make sure we can get the feature set completed to the fullest extent on mainnet first, and then replicate the system and decrease costs for users across the board. I think the thing that might be slightly more interesting is the replication of the same idea for various different ecosystems. So the idea of price agnostic underwriting of proof of stake systems and building kind of like these staking and restaking specific financial primitives for other ecosystems. And that's something that we're actively looking into. I think when you look at Cosmos ecosystem and the idea of shared security, you get a lot of the same flavors of what you have with restaking on Eigenlayer and on mainnet. I think there's a place to build similar financial primitives in ecosystems such as that as well.
Yeah, for us, we are planning in terms of like new chains. We are planning to launch OmniChain in January. So right now we are in talks with Binance, for example, to also have our Gen token in Binance. So that's the way we see things going forward, going omni-chain with our Gen token.
Yeah, for sure. We are natively an omni-chain liquid restaking project. We have our own bridge, so this allows us to, diminish the risk compared to other LST protocols. And we're going to start on Mantle and definitely, go from there. I think that, it's like a cell phone company or internet provider, right? It doesn't matter who's providing you the service. You just want to be connected to everybody, and I think blockchain should be the same. So definitely we're going for it. Yeah.
Yeah, looking at our liquid restaking derivative being used, across different protocols in a DeFi ecosystem, I mean, it definitely makes sense to deploy omni-chain, and that's something we already looked into. It gets quite interesting when you look at how the rewards, the distribution works with Eigenlayer and the point accrual, and then solving that basically cross-chain brings some challenges with it, but I think can be done.
Awesome. So how do you guys see restaking fitting into the broader DeFi ecosystem?
Yeah, I think restaking is the natural evolution of kind of the general philosophy behind proof of stake systems. Decrease the cost of capital for any type of general infrastructure-based service to bootstrap capital. You create an open marketplace where those with capital can be matched with those who run infrastructure. And then the end state is you kind of have this, you can think of it as Launchpad, you can think of it as a platform for various other, like any type of random revenue generating infrastructure project that can then, attract users to it and kind of bootstrap that user base. And ideally, you see those who can create sustainable revenue, who have a unique value proposition, rise to the top as, value accrues to those platforms. I think all in all, the kind of core philosophy of building good DeFi products is about optimizing for capital efficiency, decreasing risk wherever you can, and then ideally supporting as wide a swath of assets or services as possible. And Eigenlayer kind of checks all those boxes, even though it's a very infrastructure-focused project. So in the ethos of DeFi, I'd say it kind of takes all of those steps, the right steps forward, and ideally, we build an entirely new set of primitives that are kind of focused on understanding the capital efficiency that Eigenlayer enables, the risk that Eigenlayer brings into the ecosystem, and then the types of assets it generates. And then we build primitives specifically for that ecosystem.
Yeah, I think you said it all. It's about security, capital efficiency, bring the yields up, bringing more security to the space, and really advancing with the technology. So I do see in DeFi Eigenlayer as the next step in technology, the next natural step, I'll say. So yeah, for me, I think that everything you said, it's what we also believe, and that's the way going forward. So yeah, security, high yields, and making everyone happy and secure. So that's it.
Yeah, I think on DeFi, innovations is always not what you're expecting. And I think that happened 6 months ago when, with the Shanghai update and liquid staking become redeemable, we have seen an LSTFi boom. And, we were seeing some use cases like indexes, using it as collateral to have a stable coin and all of that. But what I always have said is this is just the beginning, right? This is just the first use cases that people are trying to build around the fact that, liquid staking is basically the risk-free rate of Ethereum, right? Because you're basically validating blocks and getting a reward for it. So it's basically you're having this risk-free rate and you're trying to build financial products or DeFi products on top of them. And definitely I think that the next step is restaking, is Eigenlayer, right? And I think this is actually what I was saying, probably 1 year ago, nobody will be even considering building a restaking project. And now we're seeing this. So I think the most important thing is probably we don't even know what is possible to build on top of Eigenlayer. We don't know yet, but probably in 1 year we're going to have crazy, amazing stuff that can not only as you're saying increase the security of Ethereum and the decentralization of Ethereum and make it the end goal, which is make Ethereum existing forever and running forever. and having these smart contracts and programs that can run forever, nobody can shut down. And I mean, this is powerful. I think not even for Eigenlayer, but I think in general, we don't, as humanity, haven't even figured out what to do with this yet. And we've seen some use cases, but I definitely think it's just a beginning. And yeah, for sure, DeFi is the way to go here.
Yeah, having been an investment banker in my past life, I'm always thinking that we really need institutional adoptions like catalysts to take crypto into its next step of its evolution, right? Basically tap into the balance sheets of insurers and pension funds that sit on trillions. Right now, we are still in the baby steps of the industry's future development, and being able to offer sustainable risk-adjusted returns with sufficient security for those type of players to enter the ecosystem and the space, I think, is really something that will drive us forward.
Awesome.
Yeah. Two fun ideas, I think, for anyone in the crowd who'd be interested, that I think would be kind of DeFi-oriented to build on Eigenlayer. One is fixed-term bonds for restaking agreements, the idea of building fixed-term agreements where I can say, I want X amount of security for this amount of cost in terms of my own token. And then ABSs can agree to that, and you can tokenize that position as a bond, create different durations, and then you kind of can build fixed-term products of different maturations, and then from then on you can build marketplaces. Ideally, you can come to us, and we can accept you as collateral as on a lending platform, and so on and so forth. Another idea, which I think is really interesting, a way to automate the exit or kind of purchase of Eigenlayer rewards into some other base asset, ETH, dollar-denominated assets, BTC maybe, automatic redemption of a whole bunch of various different types of reward tokens into a base asset value, and building a pricing mechanism for that. Two, I think, really interesting, crucial pieces of the DeFi ecosystem that'd be really interesting to build on Eigenlayer.
Yeah, I love those ideas. I've heard Shriram talk about them both as well. So hopefully we'll see some of that in the future. So we have time for one more question. So let's talk through a bit of your launch timelines, maybe drop some alpha for the audience, and also a little bit about how you're thinking about governance.
Yeah, I'll keep it short. I know we have only a few minutes left. Launch timelines, January, mainnet. And a lot of fun stuff in the upcoming weeks.
Yes, sir.
A lot of fun stuff in the upcoming weeks. We will be doing some subsidiary product launches on various other primitives and all this CK stuff I've been talking about next week and the week after. So keep a lookout for some announcements on that.
Yes, for us the same thing. So right now we are testnet, and we are aiming to release mainnet in January. So I think January will be a great month. So many things to come, and we still are developing so many more new features. And yeah, so really excited about that. So yeah.
Yeah, it's funny because we're already on testnet, thousands of transactions going pretty well, and we're also going to launch on January Q1. So it seems
January
to be a very. It's going to be a very.
Let's go.
Yeah, it's going to be a very fun in January for sure. And when it comes to governance, we haven't figured it out fully yet, but it's going to be related with V model and how can everybody participate on that this way. But yeah, that's the alpha you need to be waiting for.
Yeah, in terms of launch time, I think we're quite dependent on Eigenlayer raising the caps, and our engineers are very keen to get their hands on the M2 contracts to finalize things on our end. But yeah, there will be a token, there will be an airdrop.
Same.
Should be fun.
Same.
Awesome. All right. Well, I guess this was a great panel.
Yeah.
Thank you,
very
everyone.
much, yeah.
Fantastic.
Thank
Appreciate
you.
it.
Thank you.